Welcome to our video on funds versus accounts. Icon CMO has donation funds, accounting funds, and accounts. It's extremely important to understand the differences between these. A donation is defined as a gift or payment to a fund. This is the money members of your congregation donate throughout the year. Members specify if the money is designated to a particular cause such as youth group, building renovations, or more. These causes are your donation funds, created under donations, funds, and donations. When entering donations, these are listed under the column fund and will show up on members' donation statements for tax purposes. Donation funds are not part of the accounting module and will not show up in the general ledger or on accounting reports. Money recorded in the donations module is only a record of what your members have donated. Any reports needed for pledging or donations can be run by going to Donations, Reports. Money from other sources such as grants, fees, fundraisers, or rentals should be entered on the accounting side either as a journal entry or bank deposit. Next, we have accounting funds. Nonprofits and government agencies use fund accounting to emphasize accountability over profitability. Accountability is extremely important to nonprofits because members donate for specific reasons, and the organization needs to be able to accurately show reports of how that money was earned and spent. Think of accounting funds as pots of money within your organization. As members make donations to specific causes or donation funds, this money is allocated to the appropriate accounting fund. Determining which accounting fund has permission to spend the money that is deposited into an asset account. To determine how many funds the church needs, ask yourself, do I need to know how much was earned, spent, and remains for this purpose? If the answer is yes, you will want to create an accounting fund. Accounting funds are a self-balancing set of accounts. This means you can pull reports by fund so you can see exactly how much income was received, how much was spent, and what is left for that particular pot of money. To create a new accounting fund, go to General Ledger, Funds, Accounting Funds. Add a new fund. Enter the fund name. Determine if the fund is restricted or unrestricted. Last, we have the accounts. There are 4 main accounts: assets, liabilities, revenues, and expenses. These 4 accounts make up the chart of accounts. Asset accounts hold the money. These are your bank accounts, investment accounts, cash, equipment, or property you own. Liability accounts show the debt owed. These are your loans, mortgages, credit cards, and payroll taxes. Revenue accounts show how money was earned, and expense accounts show how money was spent. At the end of the year, you can pull a revenue and expense report to create a budget. At the beginning of each year, your revenue and expense accounts start at 0, so you always know how much was earned and spent in a given year. All of the accounts within the chart of accounts are utilized by all the accounting funds, so it's best to keep these generic. To create a new account, go to General Ledger, GL, Chart of Accounts. Click Add New Account. Select the type of account. If it's a sub-account, enter a name and click Save. There is a detailed video on the chart of accounts under the Help button on this window. Thanks for watching.